Well, I think it is fairly narrow, as you mentioned, Karen, and I think that investors need to get not too enthusiastic here. You're going to hear perhaps more talk about tapering, as was indicated in the previous report from one of the Fed governors, and I think you're going to see the infrastructure bill likely pass, as well as some other tax increases that will actually filter through the economy, not just for individuals, but potentially for companies. So with Delta raising its head, I would not get too excited about these all-time highs. I don't think it really is an all-clear signal.
Michael, typically the market is forward-looking, but it feels like it's almost a backward-looking reaction now. Many taken by surprise at just how strong the revenue and earnings were this season and getting back into stocks. Right. Is it dangerous then? Investors are sort of underweighting the potential for that taper, but also for earnings revision as we go back to some different trends away from these pandemic-fueled revenue numbers we've been witnessing?
You know, that's a great point. When people talk about how numbers are at high levels, maybe it's year over year. Well, year over year, last year, what did that look like, right? In terms of what the comparisons really are really low comparison numbers for this year to make it look like it's really, really positive numbers. So I think investors are really overstating that things are going to stabilize. Delta is going to impact the economy, and you're going to have more difficult comparisons as we go along. And so I think investors are a bit too frothy right now. I'd be taking some profit in names that have rallied, and I certainly would be careful about putting new money in the market. I do it gradually and not be too energetic in dumping money into a market that is being fueled by a lot of optimism right now.
Michael, it's a great point, isn't it? It's a difficult market now. Those who are watching go up think, well, I missed out. How do I get in? Others who are holding on think, oh, perhaps I should make some of this into real profit instead of just paper profits at this point. But if you consider what lies ahead, and you've got some sort of juicy news here, you think there's a 10% correction occurring later this year. How do investors anticipate when that pullback may happen and when to get into this market?
Well, it's virtually impossible to anticipate it. What you want to do, though, is expect that it will occur and have a laundry list of sectors, areas you want to get into the market when the downturn occurs. Typically what happens, Karen, is when the market pulls back, let's say 7%, 8%, 10%, it's pretty indiscriminate. And sometimes some very, very good names get crushed. And so investors want to look at their portfolio, ask themselves, what don't they own that they want to own? What sectors do they want to be invested in when that correction happens? Then act. What you don't want to do is wait for the market to go down and then say, oh, maybe I should think about doing some research here. That research needs to be done already when these opportunities arise.
Should have, would have, could have type of mentality, Michael. I want to ask you about the Fed too. We had some very strong messaging from Eric Rosengren yesterday that he's ready for a taper if we've got another strong jobs report. But we are getting some very mixed messages on the economy, particularly with the consumer sentiment recently, just showing that people are becoming more cautious around the Delta variant. They're altering their behaviours, which, as we know, could have an impact on the economy. Do you think the Fed is going to be able to pull the wraps off a taper announcement next month?
I'd be very surprised if they pulled off the taper, given what's happening with Delta right now. Here in California, it's becoming a major issue, and that's a state that has lots of vaccinations under its belt. Imagine what's happening in Texas and Florida right now. So I think when you're in the midst of really essentially a major health crisis, which is really happening all around the world, but is certainly still happening in the United States, I just don't think the Fed is going to be able to take off taper. I don't think that's the news they want to send to the market. Maybe wait until Delta peaks, whenever that might be, God willing, and then maybe start the taper. But I'd be really surprised if they were really aggressive in their movements in the next 2 to 3 months, Karen.
Michael, there's also some international strains too. We've seen events unfolding in Afghanistan. We've got issues when it comes to the mainland market as we look at a slowdown taking place there, along with technology regulation. How is this all impacting the psychology of the US investor?
Well, US investors are right now petrified of investing in China because of what's been happening with companies like Tencent and Didi. So you actually are starting to see tremendous hesitance in terms of putting new money at work in so-called emerging markets. Europe is a bit more comfortable for United States investors, but Afghanistan, what's happening with the price of oil, the uncertainty in China, there's just lots of global uncertainty right now. And I think for most US investors, What's happened, I think, Karen, is they've really settled back towards the United States. And I think that's part of what's driving the markets up in the United States is investors are frightened to move outside of the border of the United States. So where do they invest? In the United States and multinational corporations that maybe have international exposure, but are names they recognize and are more comfortable with.
Yeah. No.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.